Right, let's move straight to our interview now. And this one is, of course, a vital one to all of us. And it's no surprise that both the global economy, including South Africa, have taken more than just a slight downturn because of COVID-19. According to Momentum's economic and market snapshot of April 2020, it's all about the inability of South Africa's economy to output jobs. Let's discuss this further. And with us, we've got Sanisha Packirisamy, who is an economist at Momentum Investments, to talk about the economy and going forward. Good to have you. Thanks so much for joining us.
Thanks, Jan, and good morning to all your viewers.
What does Momentum's global economic snapshot say for April 2020?
Well, basically, we are starting to see that the high-frequency data on a global basis is now starting to look quite dire. And this is probably the beginning of a couple of months of very negative prints. And it's coming out from both the demand as well as the supply side of most economies. So that would be in terms of consumer spending is looking very weak. Manufacturing is looking very weak. And this is all due to the lockdown restrictions that have been placed on many economies across the globe.
Yeah. I mean, that is obviously the biggest contributor to where we find ourselves. I mean, we saw March and basically a significant portion of March and April here in South Africa. Now we're moving into May that is in lockdown. I mean, what has the impact been?
The impact has been quite severe. So in South Africa, if we look at some of our own numbers, for example, in the vehicles industry, and this is to be expected. So, I mean, still a very, very negative print of almost minus 100% in year-on-year terms. But this is really to be expected since most of the dealerships in South Africa were not operational. And again, we're not alone in this. I mean, we only need to turn, for example, to India, where their Purchasing Managers Index, which is an indicator of manufacturing sentiment, and 50 there is actually your neutral level, that crashed all the way to 5 index points yesterday. So again, we are starting to see some very dire economic information coming out more recently. And this is quite telling in terms of how severe the contraction in growth is going to be for the second quarter for the year. And of course, that having quite a big impact on the overall 2020 numbers.
Yeah, I mean, it's a frightening story, but it's, as you say, not just the South African narrative. I mean, we talk to America, as you say, the world's largest economy is basically almost grounded to a halt, and the amount of money that they're loaning at this time, it is absolutely insane. If numbers are still correct, I don't know if it's gone up since then, we've seen over 20 million Americans file for bankruptcy, and that the economy is only expected to pick some pace up in around about 4 months' time. This is going to have even more of an impact on us as well.
Most definitely. And the way we are impacted is our export conduit, because this means that if global demand is soft, even though our very depreciated currency, under normal conditions should make our exports look very attractive to other markets across the globe, when other countries are actually not opening their borders for things like imports and exports, it means that South Africa's exports can't actually get the benefit of a much weaker currency right now. And in the United States, the information that's coming out there doesn't even look as bad as what it's worse than what we saw during the global financial crisis, which was essentially a financial market shock. This is now starting to look like data that we saw during the Great Depression. And this time around, of course, it's been a health shock that has now morphed into an economic shock that has then impacted financial markets. So the extent of the data we see now is quite severe.
Also China. I mean, we talk to huge imports. This is a massive trading partner of ours, and it's also the second largest economy. It also took a major knock in the first quarter of 2020, with their main manufacturing output taking a complete nosedive. Again, talk to us about this. What is going to be the impact going forward with this?
So what was quite strange about this sort of crisis is that all economies are being hit, but it seems to be a bit of a rolling impact as the epicenter of the COVID-19 pandemic essentially shifted throughout the globe. And of course, the East with China, being impacted first. So, we really all are having our eyes on China and looking to see how their re-emergence from this COVID-19 pandemic plays out, because this will be a sign of how things will play out in the rest of the globe. So as expected, the worst hit for China is really essentially coming out in the first and potentially some of the second quarter. But with that country, coming out of lockdown a lot sooner than many other countries in the world, we would start to see some information improving at the margin. But this is not like switching the light on. So it's going to take a lot quicker to freeze an economy than to thaw the economy. And we are in that thawing phase now in China, where it's going to take quite long for everything to come back on stream. If you think about the supply side sector and the manufacturing sector, it's difficult for them to know how much demand there really is in the global economy in order for them to produce again. So there's going to be a lot of confusing signals in global supply chains for some time. And as a result, even though it took so quickly for the economy to grind to a halt, I think it's going to take a little bit longer for the economy to get going once again.
Few will argue that the most hard hit and truly one of the hardest hit is that of tourism and hospitality. Where is the end in sight? I mean, we're seeing airlines collapsing in front of our eyes, not only here, but all over the world. Hotels are empty. You've got function venues that are empty. I mean, this is real. And the turnaround for this, who knows? That's so up in the air. Talk to us about this particular sector.
Surely, and so, as one would expect, your entertainment industries and your tourism industries and travel industries are going to be amongst the hardest hit. And that's essentially because those are the relaxations that we are not going to see for some time. So while we might be able to open up some sectors of the economy, I think travel bans across the globe may be there for quite a reasonable period of time. And it doesn't really matter, throwing money at the problem or cutting interest rates. That's really not going to help tourists coming back into a country. What you really need to see is a relaxation of those measures. But at the same time, we need to be very careful about the health guidelines that are being implemented around the world. And as a result, I think those industries are going to be amongst the last to recover. Again, we are in completely uncharted territory, so it's very difficult to pinpoint when that is exactly going to happen. But really, in terms of economic forecasting, what we are forecasting is some other areas of the economy to come back first before we start seeing things like tourism picking up. Even in the entertainment industries, for example, large events like concerts or even just dining out in restaurants, that's going to take some time, as I think this COVID-19 pandemic and the social distancing measures that have come with it could actually change consumer behavior going forward. Alone in the United States, more than half of the consumers there that have been surveyed suggest that some of the social distancing measures may be in place for some time, and they believe that consumer behavior is going to change on a more permanent basis.
It really is. I mean, this is, you don't just suddenly end lockdown and everything goes back to normal, and people haven't got money, they haven't been able to spend, there's still the fear of traveling and all of these things. And this, of course, lands us back to the scenario here in South Africa. I mean, I've just been reading that, even in the UK, they've had the worst GDP in 300 years. I don't know how the world grows back from this, but it does. It will get back, but it'll take a long time. But if we come back to South Africa, we were in a terrible situation even before COVID-19, and we were getting warning signs all over the place that the economy was in dire straits and that jobs were set to be lost anyway. And now with COVID-19, what is going to happen? I mean, there's been talk of unemployment in South Africa expected to reach close to 50%. We've been downgraded now to junk status by a lot of reputable credit rating agencies. How long is South Africa going to take to turn around?
Leanne, I think South Africa really is at the crossroads now. And as you've pointed out, other economies across the globe were quite fortunate to be on a relatively strong economic footing before the COVID-19 pandemic hit. In South Africa, we were not as fortunate. We already had hit a technical recession and our fiscal deficit measures were looking quite poor. And at that stage, we were still trying to find out ways of, curbing expenditure and trying to boost revenue. And in this kind of environment, it's going to be quite difficult to boost revenue when some consumers are actually not employed and facing the threat of looming job losses. Our own National Treasury has put out forecasts where they look at 3 scenarios potentially unfolding. And even in the best type of scenario, the African economy still contracts by around 5%, 5.5%, and that still sees 3 million worth of job losses. In the very worst outcome that they've penciled in, We have an outcome where the South African economy contracts by 16% this year and loses up to 7 million jobs. And 7 million jobs is very significant when you think about South Africa only employing 16.5 million people. Currently we have 6 million people that are unemployed, and that number is likely to ratchet up. So unlike some of the developed market counterparts that we have that are probably going to bounce back quite strongly on that low base effect going into 2021, I think in South Africa it's going to take us a bit of a longer time because we don't have as many resources available at our disposal in order to climb our way out of this economic hole.
Yeah. Sanisha, as we wrap this up, I just want to add this into it, that you surveyed many businesses and overwhelmingly over 50% are not sure if they're going to make it and or reopen. Perhaps you can talk to us about this and the applying for some form of financial assistance. This is showing it's not really helping businesses at all. I mean, is that how bad it is? 50% of businesses may not reopen.
And I think we do need to bear in mind it's a survey that was done by Status A at the beginning of April, and I think sentiment obviously at that point was very, very blown out. Since then, we've had some, measures coming through from government, such as the loan guarantee program, and it's still yet to be seen whether companies will be making use of this. At the end of the day, I think, this loan guarantee program will be for those businesses that are already on solid footing, that have only now experienced difficulties under the COVID-19, restrictions on the movement of people in South Africa to curb the spread of the disease. But, unfortunately, going forward, I think we are going to see some of the smaller businesses and informal businesses coming under significant strain where there isn't enough support to get them through this very tough period. Even going into the crisis, if we look at 2019, in South Africa, we had the highest number of businesses liquidating and insolvencies coming through since the global financial crisis. So again, really speaking back to that point that you mentioned on earlier, Leanne, that South Africa went into this crisis on very poor footing. So I think, as consumers and potential employees and businesses out there, we do need to start changing our frame of mind to think about a world post-COVID-19 and how to generate business activity in quite a suppressed environment.
All right, we leave it there. Thanks so much for talking to us. Sanisha Packirisamy, who is the economist at Momentum Investments, talking to us about Momentum's economic snapshot for April 2020. And it certainly has not got a very rosy picture at the moment. All right.